Alright, this video is part 4 of the Pillars of Trading series. This is about the fifth time that I've tried to record it. It looks like Chromebook has done a system update, so I'm actually able to screen record straight through my system rather than having to use a website, Chrome extension type thing, which is great, but last time I did it for about 25 minutes, first time, and didn't check if it was recording my microphone as well. So it was just basically loads of screenshots um, without any words. So that was a bit pointless. So let's do this again. Right. The whole point of this video is something that came up for me and for other people that I was working with last week, and it is how to find the right pairs to trade. So I don't know about you, for me last week was slower than normal in terms of the actual smooth moves that the market was given. A lot was kind of coming into reversal areas, popping off of there, and then sideways, and then just not smooth movements on higher time frames, especially talking 1 hour, 4 hour, especially the 4 hour. Now that has translated into weekly candles that are sideways, not very much momentum on the main pairs that I trade. So as you can see here, sideways, the Euro New Zealand was horrific on the 4 hour. I've already done my done my lines for next week, so they're already done. But you can see again, Euro dollar. Look at the difference of that candle compared to previous couple of weeks. It's sideways doji, pound dollar. You can see sideways again. Euro Aussie sideways again, and dollar CAD you can see is sideways. So that to me is kind of not the best trading environment for someone like myself that trades likes to get in trades that are lasting kind of 2-3 hours and above, and ideally for longer, because that just shows to me that there's no definite bias, there's no definite kind of momentum in one direction that should make trades smoother, easier to manage, going past targets 1 and 2 a lot easier than whenever price is ranging on the higher time frames. So therefore, the whole purpose of this video is to kind of just say, have your main pairs. I totally agree with the fact that you should concentrate on your main pairs. Whenever I was first on my journey and I first bought a couple of courses, it was always about, the more pairs the better, look at every single pair every single day, and it was just, you just never really got in sync with the pairs that you were trading. It's alright if you're a swing trading and you're waiting for areas on the daily to be hit, then it makes sense to have more pairs because naturally price is going to be slower. But for myself, I wanted to be a day trader. It just didn't make sense. Now, most of the pairs the reason why I chose the pairs that I have are that they are, in my eyes, the pairs that trend the most often. But I have to be aware that most pairs trend at least once or twice a year for 4 to 6 weeks. And as a trader, I should be making the most of those environments whenever price is trending. Now, I specifically want to concentrate on the 4 hour in this video, but this works for other time frames. I just would suggest not going below the 1 hour for it, and if you want to look at longer term stuff, then obviously the daily. But for me, the daily's too long to start getting into trends. I would rather just see it on the 4 hour, be a bit quicker, and then get more of the move rather than on the daily. So the whole the whole purpose of trading is to make money, right? The best way to make money, in my eyes, in the way that I trade, the way that I've worked through the markets over the years, is in a market that is in one definite direction. That is the best way, because you're more likely to get a better risk reward. You're more likely to have smoother management criteria. You're not really going to have to you're not really going to have to micromanage things, and it just should be over, in general, a smoother period to trade. So with that in mind, it's like, well, what are the best environments for that? Well, clearly, whenever the higher time frames are in a certain bias, certain immediate momentum, and they're running along together, then that's definitely the way that makes sense to trade. So a lot of these pairs, this is the list that I use to basically see in general what the kind of weak and strong pairs are. Now, what I would suggest is create a full list like this. Look at it once the night before the next day, and once in the morning, for the kind of way that I'm going to be shown. Now, this should be the way that you look for the strongest trending pairs. Now, historically, I've traded all different types of pairs, but through my experience, I've narrowed the pairs down. At one point, I was just trading one pair, and then I kind of evolved that into more pairs. And through my journal, through my trading, through my experience, I have found that the best way to trade for me is in trending markets on the higher time frames. That gives price more opportunity to go 1, 2, 3, 4 plus hours in my direction than quick trades in and out that can still be profitable, but there's just not that much chance of price going beyond your kind of target 1 if target 2. So the previous week, last week, was, as I said, very, very sideways price action, and on my main pairs. But if I look at especially something like EuroCAD and PoundCAD, you can see here clearly, I'll just do a comparison, you can see for since the end of February, that is a clear downtrend. If I go to pound dollar, for the same period, you can see here that we are basically in a sideways range on pound dollar. Now, that to me means, well, what price action would you prefer? This on pound dollar or this on pound CAD? For me, it's a no-brainer that I would prefer trading within pound CAD. The thing is that I have kind of neglected pound CAD for good reasons in the past, because it's not really trended that well. Pound dollar's usually been the one that trends better, but I have to be aware that even pairs that I just won't trade that often will have a period of their time in the limelight to trend well. And that's the same with EuroCAD. You look at EuroCAD, it's nothing but sell since the start of the month at least, if not since the middle of February. And this is something that I'm annoyed at myself for not getting involved in these smooth moves whilst trying to find trades on something like Euro New Zealand and something like this. It's just, there's just no comparison. It's just, you can see it wouldn't take much from someone that's educated in trading or not to be like, I would say out of the two charts that this is a lot more kind of close price action, not very much movement in one direction compared to the other option, which is obviously EuroCAD. Now, they're still involving one of the currencies, Euro obviously, but obviously the CAD was a lot stronger than New Zealand, so then EuroCAD has been able to create this kind of price action, whereas Euro New Zealand hasn't. So what I would suggest is that, as I say, I'm going to be doing it, I'm adding it to my process every single day. I'm going to be doing this once a day, and I'm going to be putting it into my videos about the kind of pairs that I'm seeing possibly currently trending on the 4 hour, or possibly starting a strong trend. I'm seeing like crucial breaks and some real strong momentum, etc., that you should be aware of for a period of time, that you should put it onto your kind of main watch list. That's what I'm going to be doing anyway. I'm going to have a section on my main watch list that will be trending pairs. And whenever a pair is trending, I will have it in there. And then whenever it's not, whenever it slows down, I'll be taking it off. So then it's kind of like having a football team. You've got a sub bench, you've got your main kind of team, you've got your main players, but then not everyone can be in a hot streak, a hot like form all the time. So you have to give people a breather. So it's the same with pairs. You have to have a subspec that they start showing in training that they're ready, and they're showing some signs that they're ready for a chance, and they're showing that they could be in a good streak of form. Put them out there, let them cover for a pair that would be your kind of normal, like, regular starter, and then that'll have a breather. But instead of trying to trade whilst it's having a breather, you can get involved in the clearer trending pair. That should be an easier trade that you should be able to take advantage of easier and better. So that's essentially what this video is all about, is just understanding whenever price is trending on the 4 hour, you should be highlighting that pair no matter what it's done in the past. Like, if there's something, I say Aussie, New Zealand and Euro Pound would still be something that I won't really trade ever. But the other ones I am open to now, kind of allowing it. I mean, Euro New Zealand, it's still one of my main pairs. I'm just like, I'm focusing on 5 or 6, but I'm just looking to have one or two that are strongly trending on the 4 hour to give me that kind of clear bias every single day, that it's like, right, this is in a clear sell momentum trend. I'm going to wait for pullbacks, or I'm going to get a continuation in that direction, and there's no other reason to look for buys. If it is a counter trend day, and it is a deeper pullback that lasts a whole day, that just means, to me, as long as 4 hour structure stays intact, that I'm just looking for price to have a deeper pullback that's then coming into intermediate structure on the 4 hour for that next move to the downside. So something for you to be aware of. As you can see, there's been times with Aussie yen. You can see here since the start of February, it had a really nice move in the whole of February, basically, that unfortunately I wasn't looking at it. I wasn't looking at that pair. I have to put my hand up and be like, I need to be more aware of the whole market rather than just the pairs that I like to trade more often, because you're missing movements that you can catch. The part of this that then just makes your percentage gain easier to get. You're just giving yourself more chance to have a 1 to 4 plus risk to reward. But it just comes from keeping your eye on the ball. And what I would do as well is look at the commodity side of things: gold, silver, other commodities, oil, etc., and also indices as well. I would give them all a look and just keep in mind whenever something is strongly trending, and get it onto your kind of the forefront of your trading, the kind of pairs you're looking at on a daily basis, and look to trade it until the momentum dries up, trend dries up, and it kind of says to you, look, probably just give this a breather and look for something else to trade. Or whilst you're trading that, something else could be starting a new trend that you feel, well, get that on and then into your main list as well, and then whenever the other one is slowing down, you can trade them both until one slows down, get it out, replace it with something else, and it's just that constant churn amongst your core group of pairs, you've just got that wider view of the market that you're able to capitalize on smooth trends on the higher time frames on a day-to-day basis. That should allow you to get one or two, three decent trades per week on pairs that are outside of your core group but are trending very nicely. So if you've liked this video, then obviously got some value out of it, then just give us a subscribe and hit the notification bell and give the video a like if it's of value to you. And yeah, I look forward to doing the next video in the series, and I've been getting great feedback on it, so I just want to try and create this series that can really be of use to someone that is either just starting, or even better, it's for people that have been doing trading for 6 months to a year and been having some winners, some losers, just trying to tweak things to get better, and focus on their strengths, which strength for me and what I would say is the clear kind of way to trade in the most stress-free way is to trade with the trend. Trend is your friend, and it ends a lot later than what most people think. That's why they get trapped in reversals. So yeah, that's everything for me in this video, and yeah, look forward to hearing from you.